Why are ETFs a great tool for investors? Well, there are lots of reasons. In this brief video, we will explain exchange-traded funds and their benefits. Exchange-traded funds are open-ended funds that are listed and traded on a stock exchange. In a way, they're like a mutual fund because they're a basket of securities which may include stocks, bonds, and commodities. They can be broadly diversified or narrowly focused. They can be managed like a typical actively managed mutual fund or like an index fund that tries to replicate the performance of a benchmark index. ETFs are also similar to individual stocks because they can be bought and sold directly during the trading day. ETFs offer a number of attractive features and benefits that contribute to their popularity as an investment vehicle. They offer broad diversification. By aiming to replicate a specific index or market return, an ETF incorporates all or a representative sample of the securities that make up that index. This can help lower portfolio variability and reduce price volatility, especially when compared to individual securities. They offer targeted exposure. With the creation of specialized equity ETFs that hone in on sectors and regions, and with the refinement of fixed income ETFs based on credit quality and term, investors can now use ETFs to implement their investment strategies in place of individual stocks or bonds. ETFs can be used as efficient, powerful, and precise tools to create or fine-tune an investment portfolio. They're very liquid. Unlike other similar investments, ETFs enable investors to buy and sell whenever the markets are open. In addition, the true liquidity of an ETF is represented by the liquidity of the underlying securities. ETF trades occur easily and with minimal costs. While the liquidity of an individual security is directly related to the trading volume of that security, the same correlation does not apply to ETFs. The liquidity of an ETF depends on the liquidity of the underlying securities. They're low cost. ETFs tend to charge lower management fees, expenses, and trading costs than other diversified investment options. That means more of your money is working for you over the long term. They provide transparency. You can see the current trading price of an ETF at any time during a trading day. You can also see the holdings of your ETF's portfolio each day. Compare this to mutual funds that provide these updates every 3 months. They're flexible. Aside from the ease of buying and selling ETFs at current market prices throughout the day, ETFs offer you many ways to build your portfolio. And you have access to a variety of traditional stock trading techniques with ETFs. For example, you can buy on margin to create leverage, and you can control the price of purchases with stop and limit orders. And they're tax efficient. ETFs are among the most tax efficient investments for 2 main reasons. First, ETFs tend to have low portfolio turnover. This is especially true for those that track indexes. The less often you buy and sell investments, the fewer taxable events you'll experience. Secondly, ETF shares are bought and sold directly from an exchange, similar to how you purchase stocks in the open market. This can be more efficient than buying and selling mutual fund shares. The redemption of mutual fund shares can force the fund manager to sell stock quickly in order to raise cash. That sometimes triggers large taxable capital gains. Investors can seek exposure to the entire global investment world through specialized or highly focused ETFs. These include international equity and bond ETFs, regional ETFs, and industry and sector-specific ETFs. BMO Asset Management offers a wide range of ETFs that cover most of the major global asset classes. These include broad market ETFs, fixed income ETFs, sector-based ETFs, and many more. For market views and market-driven investment strategies, sign up for the BMO Trade Opportunities or subscribe to the ETF Portfolio Strategy Report. You can get the latest economic and market developments with insights on using ETFs in a balanced and multi-asset strategy guided portfolio.